We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more. We're going to win.
No, sir. No, I'm not tired of winning, but I'm ready to get this winning party started. Why exactly did the markets crash today? What is going on? Well, we've got a brand new Fed, and some of you just haven't recognized it. The man who's moving the markets is no longer Jay Powell, but it's Trump, because the biggest dynamic that we're dealing with right now, the greatest area of uncertainty, isn't necessarily inflation. It's this tariff war, and the question is, how far is Donald Trump going to push it? Now, I do believe the man has got the intention to produce some wins in 2025, and I'm sure he has a timeline. None of us know it. The fact is, in a conversation, he was asked about the R word, recession, whether or not he could see the U.S. going into a recession, and here's how he answered. He said, I hate to predict things like that. There is a period of transition because what we're doing is very big. Well, we had initially transitory inflation. Now we've got some transitory tariffs on the part of our new Fed, warning us that until this gets resolved, until he can pivot his attention away from tariffs, we're definitely going to have to price that in, and that's why the markets absolutely sold off. What are they doing? Well, they want to crash the markets. The U.S. government has to refinance $7 trillion in debt, and they need to do it in the next 6 months, and there's no way that Trump wants to do that at the current 10-year yield. And so that is what's going on. They're waging an economic battle that will cause the market to crash, that will force the Fed to cut. You know, we should have known this really from the very beginning when Donald Trump ordered the Fed, which we know that he can't do, ordered him to lower rates, and the Fed basically said, no, I'm going to stick to my mandate. Well, Trump's not going to wait for him. He's going to crash the market, force the Fed to cut, and then we're going to see an absolute rally because that's what the market really wanted anyways. They want lower rates. It's going to stimulate the economy. It's going to allow companies to borrow more money, and it's going to allow the economy to move forward. And so, yes, it is temporary pain for a later gain. Let me know if you believe that. I do myself, but let me know how you feel about it in the comments section, because I know one thing, that your portfolio is not lying to you. It was a sea of red today. Tesla, our beloved Tesla, down $41 in one day. But the chart does tell an interesting story. I'll take a sneak peek with you guys at Tesla today to show you where I see support, where I see resistance, and what exactly I think is going to happen. We're going to take a look at the SPY because, as I said to you in my last video, I'm feeling bullish. I want to remind you guys that I told you that between Friday and Monday, we'd find the bottom. Well, we certainly searched out the bottom today, and I do believe that we found it. And on that note, I took risk on companies that I liked. I'll touch on that a little bit in this video. Guys, this is the Stocks with Josh show. Thank you for joining me. I know that people are in a world of pain. Right before I came to shoot this video, I was chatting with somebody who said they were walking away from Wall Street. They said for the sake of their health, they had to turn away. I know that this is for real painful. There are people that have made some very bad decisions because they backed themselves in the corner and they couldn't imagine how they would get out of it. First of all, I just want to encourage you guys, we will get out of this. Portfolios will be firing to the upside. I personally think we're going to see some sort of a reversal this week. We've got important news that's going to drive the market this week. I'll highlight that here in a minute. And the fact is that I believe today was the buying opportunity that I alluded to on Friday, that I said that I was bullish to buy. Guys, I've got a chart to share with you, which is going to further illustrate that today might have been the best buying opportunity that we would have for months and months and months. I think that you will find it very, very interesting. This is the Stocks with Josh show. Thank you for smashing that like. Join the community by hitting the subscribe button. We're doing Wall Street together, and some days it's a support group. Some days we got to pass around the hopium. Today we were passing around the copium. It's a difficult market, no doubt, but truthfully, I'm very excited about buying some of these incredible companies that I believe are going to be way higher in 2025. I'll give you guys my targets. You know, I've made predictions on this show. I've taught and shared what critical support is, and it proved to be critical support. Recently, last week, I joked about if you bought Meta above 612, it made you a lunatic. Well, Meta came down and showed us that it had plenty of room to the downside. You know, but the fact is, this isn't a joke. This is a huge money-making opportunity. Now, this morning, there's people doing their own thing, and I can't tell you to follow me. I can't. I can only tell you that in the Stocks with Josh Discord, my personal pro trading community, the very first trade setup that I gave this morning was to lead with Tesla puts if the price broke below 250. And as I just said, we dropped $41. If that's not a cash printing ATM, I don't know what is. I want to share a video with you of Lloyd Blankfein and Charlie Rose, an interview. Check this out, and I'm going to comment on it here in a minute.
How far out into the future do you think you can see?
Well, I'm in the risk management business, so I don't take it for granted that I can see behind. I don't think I can see 4 inches into the future. I have views about the future, but I'll tell you, we're not in the business. You wouldn't be a very good risk manager if you let what you think was going to happen have too great an influence on what you plan for and protect it against. What we really do is we really contingency plan. What might happen, what could happen.
So what I wanted to highlight for you guys is the absolute importance of just not going all in on your bias. Now, I've got a bias today that this was largely the bottom. I believe that we're going to reverse. I'm going to share some of the data points that's causing me to believe that. However, I have to ask myself, okay, Josh, but if we don't, is your position size too big? How much would you lose if the stock went down significantly rather than going up? We have to have a contingency plan for loss so that we can stay in the game and we can cut our losses so the market could present even a better buying opportunity the next day. I've used this analogy a million times, which is that Wall Street is like you stop in at the subway and you can catch a train every 2 minutes to your destination. The destination is profits. And if you miss one, just calm down. Another opportunity will come along. Sometimes you just turn around and there it is, staring you in the face. Absolutely. Okay, let's move on. So this week we've got big data. We've got the CPI coming in on Wednesday at 8:30 a.m. Eastern Standard Time, consumer. And then we've got the PPI coming in on Thursday, an hour before the market opens, 8:30 a.m. Eastern Standard Time, producer. Now, both of these are important. I actually lean towards believing that the producer price index is going to have more relevance, but I think largely whatever the bad news is, and I'm imagining that there are those who already know that it's coming in hot, whatever the bad news is, the fact is it's gotten priced in. I don't believe that even if it came out screaming hot, I think that we would find that it's been priced in. What we're waiting on, and the news story that can move the market at any time, is our new Fed President, Trump, to let us know that he's worked out a deal, right? Let us know that he's talking to the deal makers. Let us know that he's optimistic. I personally believe that we're following exactly the path that we had originally started on with Trump in his first term, where he negotiated these tariff deals, came to a resolution quickly. This is not going to be a prolonged battle. And the very minute that this uncertainty is lifted off of the market, it's going to rip. Even if we go down a little bit, if you're giving yourself a little time for your positions, everything, in my opinion, is going to rip. And I feel like I've got a pattern to show you in the SPY that proves that case. But before I get that far in, I want to talk with you guys about the AAII Bear Index. Now, this chart is the primary evidence or proof of my bullishness today because we hit the same level of 60 that we hit back in October of 2022. Now, who hasn't stared at those lows of October of 2022 and wish that they didn't buy more? And today, the day that I told you that we would fall some more, but that I was bullish to be a buyer, will probably go down in history as another day in 2025 that, oh, you had wished that you tried a little harder and possibly put a little bit more money to work and took a little bit more risk. Let's quickly go look at the SPY index real quick, and I'm going to share with you guys what I'm watching and why I think what I think. We've gotten all the way down to a low of 555 roughly, and we've hit this moving average. Now we're looking at weekly candles, and we're on the 50. So this is the 50-day MA. All right, now here's something I want to point out to you. First of all, you can see that it very rarely comes to this on the weekly. Very rarely. So let's just go back in time and look at the last time that it came and hit this. Well, actually, it was the 2022 bear run that we got into. And in that past, you can see that similarly on the weekly time frame, we had really never even came close to it. But eventually, when we got to this peak, it took us 3 weeks to get hovering right above it. And on the fourth week, we tapped it and popped. Okay, now let's just take a minute and go back and look at what we just did. Well, look at that. We did the exact same thing. We avoided it for a long time, and then we got to this period of time, and I'm going to zoom in for you. We avoided it for a long time, and then we took 3 weeks, 1, 2, 3, to come down to it. We hovered right above it. Now today, we've come down and tapped it, and I am suggesting that come Tuesday and Wednesday, we're going to see that weekly candle. Right now, it's a weekly candle, but it's only got 1 day in the matrix of it. We're going to see that weekly candle turn green, and we're going to see this market bounce off of that 50-day moving average on the weekly time frame. Now, that's the pattern that I'm watching, together with a lot of other things. The fact that big tech, which is some of the big tech companies are crushing it like NVIDIA, and they've come down to critical support. We know that the Blackwell chip is going to be a huge profit generator for NVIDIA. We know that he said that margins were going to reaccelerate in the second half of 2025. And I believe he's right. And I believe that we're going to see NVIDIA back up to $140, $50, and $60. I really do. That's my personal conviction. That's why I bought NVIDIA. And I gave the options and the shares. I don't worry about the shares. That's long term. But the options, I gave them time. I bought June options, giving the market a little bit of time. If it needs another week to go lower, I'm not going to panic. I do have a stop loss set. I provided that in the Leaps channel of the Stocks with Josh Discord. I gave technicals for every big tech company today, giving an exact scenario of where support and resistance was right now. I personally believe that we're sitting on critical support, and I personally believe for myself it won't be a mistake to buy critical support. Critical and historic support makes sense to take risk on, unless all hell broke loose, unless a war was announced tomorrow. There's no reason for this market to go lower. But let's go back to that chart real quick and analyze it just a hair more and look at what happened next and see what that might indicate for the move that's ahead of us right now. When we got into this period of 2022 and we bounced off of the 50, we came nearly to the top of the candle that brought us the hardest down from the top, okay? So right there, okay? We came up to it, and we actually tested it 2 times over 2 separate weeks, making a very common pattern that you know that your man Stocks with Josh doesn't ignore, and that's a double top. It's a very bearish signal. So nobody should have been surprised when this thing broke down. We had 1 week bounce, another week follow through back up to a pretty important level, and then a double top with a clear rejection candle and a move back down. And I just want to point something out to you. What happened even then? Well, it did go lower, But goodness gracious, it came all the way back up and tested that same level again. 3 times it tested this level before ultimately going in to that bearish 2022 season. So let's go back to the present and talk about what people are expecting and why I'm expecting what I'm expecting. The similar price point that I think that we could test at bare minimum 1 time, if not 2 or 3 times, is this 592, right? We're going to see this market absolutely reject at 592, I believe, before we go lower. So I believe that that today could be the low of the week. It wouldn't shock me if we had another inside day tomorrow. But remember, these are weekly candles. In the end, I think over the course of the next 2 weeks, we're going to come back up and test this 592. It wouldn't shock me if we get rejected. We could come back to 568. We could even come back lower. But ultimately, I believe that we'll test this 592 more than once before this market determines if it's going to go down. Matter of fact, by the time that happened, we would have a ton more data. And the data would have to support an ongoing contraction in the economy. And if you really take a step back and listen to all the analysts, most of them are telling you, including the GDP, that we still have expansion. I think that AI is a game changer. We have a very uncertain market. I talk a lot about the fact that Doge brings an element of uncertainty with deep cuts and layoffs with the United States government. And as far as I know, that could be part of Fed Trump's plan, right? This effort to cause the market to become unstable a little bit to get the Fed to cut. Because once the Fed cuts and they can refinance their debt and corporations can get more leveraged back up, then the economy will scream higher for longer. And I think that in the end, we're going to have a rough patch that we're going through right now. But by the middle and to the end of this year, we will actually gain ground and make all-time highs for the S&P 500. I absolutely believe that. That's my bias. But as I took the time to introduce you to the gentleman, his name was Lloyd BloFin, he's a reminder that no matter what your bias is, you have to have position size control, you have to have a stop loss, and you have to have a plan. What do you do if you're wrong? Okay. I am gearing up and buying this dip, as I've made it very clear in this video. My last video titled Bullish Now was a aptly titled video. It was to prepare you for this dip on Monday. And I am telling you that I'm watching for the recovery Tuesday, Wednesday, or Thursday. Maybe it's the market's reaction to the CPI and PPI. Maybe it's something Fed Trump says. I don't know, but I believe that the market has gone down low enough to justify that dead cat bounce I talked with you about. Now, what we're really going to have to do is to see how high we get to determine whether or not the move has any legitimate legs higher or whether we go on to make even a lower low. You've got to stay connected. I'll let you know what I'm seeing. Let me know if you see what I'm seeing in this moment right now. I need to hear from you guys. Let me know if you're putting some money to risk, waiting for tomorrow morning. I can tell you this. I've talked about this a number of times, and I'm going to repeat it. Right now, all the profits have been made by shorting the market. When I released my trade setups that I give 5 days a week in the Stocks with Josh Discord, I said, remember, guys, the profits being made right now in the puts. Focus on the puts. Why did I emphasize that? Well, it's because the number one discipline is trade the trend. The trend is your friend until the end. And that was the case today with a $41 drop on Tesla. If you took the trade, even one put, you would have seen a beautiful gain. Some of you don't know how to take puts, but it's not as big of a mystery box as you're feeling. Honestly, I'm not going to tell you what to do, but get to your paper trading function and just hit any old put, right? Take the trade setups that I'm giving, select any put that you see on there. If that price gets crossed and I tell you where I think it's going to go, See if you can lock in a gain. Sometimes you just have to get your feet wet a little bit. I'm not telling you to put real money to work. I'm telling you that right now you want to be in a position where you can trade both directions, because the trend locally in the short term and a little bit the midterm has been absolutely to the downside. Now we're going to see if this reverses this week. My deadline for reversal is end of day Wednesday. If we've not reversed by end of day Wednesday, well, then I'm going to be imagining that we have a news catalyst event that is yet to be revealed. Something way more ominous, which I don't see. It's going to go in stages. Even some of the worst charts, they have had to consolidate at various levels. Keep in mind and use this as a learning opportunity. Anywhere where you saw Tesla consolidate, that's future resistance. Now let's take a quick peek at the Tesla chart, because heaven forbid we have a whole video without looking at the Tesla chart. Okay, guys, look at that. Oh man, look at that, right? Okay, so this is October right here, right? And this is November. We have officially wiped away all of the November gains on Tesla. Wow. We got there quickly. So real quick, I want to point out a couple things to you. One, volume is massive. And right now, the last time that this thing was getting ready to explode, it had a volume bar equal, if you guys can see it, equal to the volume bar that we have now. Normally on support, when you get a volume bar like that, it signals capitulation and the potential for reversal. Now, I want to point out a couple things. This is an area of consolidation. This is the area of support that's ahead of us. We don't have to hit it, but it wouldn't shock me if we tapped it in the morning. But I do believe that we are going higher, and the first area of resistance is 238. But I believe that it's very possible, if we get that full-blown move that I've been talking about, it's extremely possible that we will get all the way back. My immediate target for some of my immediate positions is 250 to 260. That's my immediate target. So in my mind, bounce zone, take profit zone right there. Now, I'm not always talking about long-term trading, but I will tell you guys that I think that these things are attractive for long-term buying, right? I do believe that. Now, I had little nibbles along the way, but it's time to get serious for those who are serious investors. You don't get this opportunity. You ask me, what's my prediction for Tesla in 2025? An easy $350 before the year is up. Okay, easy. Now, I think that every single time we see in the oversold daily time frame when Tesla's been pounded like this, we see that it was the right time to buy. And I made mention to you, I'm not going to get off this point, that robots are going to be huge, absolutely massive, because there's so many reasons. I could spend a good long time explaining why that is. And let me just highlight it real quick. The number one reason why the US ships jobs overseas is not for their technology, not for their innovation, right? I'm not saying that other countries don't have things to offer. It's primarily because they're cheaper labor. It's the primary reason. So if America could truly utilize robots, and I saw a video today of Amazon with hundreds of robots deployed in a warehouse, obviously in a beta, okay? Jeff Bezos is going to ramp up and he's going to let a ton of people go. Labor is going to change. You're not going to be able to feed your family by stacking boxes in the future. So it's another reason not to idly walk away from Wall Street, because I believe that this is going to be an investor's economy. And, you don't need a lot of money. Truth be told, you could do it with $500 to start. But what you can't do is you can't do it without any knowledge. You can't do it without any discipline. And you can't do it without any help. So much help being made available by myself and my crown traders in the Stocks with Josh Discord. And at bare minimum, it's a place where you could learn and you could begin to try to approach a setup daily. That's something I've worked on. And that I'm taking, right? And so it enables you to follow along. You put that together with the disciplines, and this is a place where you could succeed. Robots, Elon's the one that's making them. Now, I don't know if he's as far along as other companies. He doesn't have to be. He is the American provider, and this is technology that the U.S. wants to keep within America, and it's the one that's going to be regulated for use in the United States. Okay, and so the fact is, he is the major player here in the U.S. Could he have competition? Yes, he'll have competition. But the fact is that when he rolls out these products, this stock is going to rip. Absolutely rip. I don't believe that we have seen the all-time high for Tesla. And so it's days like this that I'm not at all scared, understanding what is going to happen over the next couple of years. And a lot of it can happen in Trump's presidency. You know, Trump and his vice president, Elon, there's a little bit of truth to that. The fact is I've never seen the president rely on someone as much as he has entrusted power to Elon. And, you know, things could change. But the fact is that, yes, Tesla could be not a $3 trillion company, could be a $10 trillion company. At least I believe that it's a narrative that the market will take a risk position on. So fact is, a lot of analysts are still holding on to Tesla as a buy. And I think that personally, so is Stocks with Josh. Guys, I appreciate you joining me today. I'll talk to you in the comments. Don't sleep on the Discord. Peace and blessings to each of you. Let's see how tomorrow goes. I think we'll see a reversal this week. Take care.